Welcome back, traders. We've got a bit of a special profile this week. It's been a minute since we've done a volume indicator, and we're including a few extras in this installment. It'll be a long play, but definitely worth it. Stick around to the end. Volume defines how much of something is in a particular thing. We use some form of volume in our daily lives without even thinking about it. It can come in the form of a pint down at the local pub, or perhaps how much leftovers can fit in a Tupperware, or even how much air your tires can hold. In our case, the volume we're talking about is market volume. This is the amount of interest in a particular market, whether it's the ever-popular euro against the US dollar, or perhaps the Swiss franc against the Japanese yen, or even other markets, metals like gold, silver, and platinum, and more recently, various crypto markets, and finally, index markets such as the SPX 500 or the UK 100. Volume, for the most part, determines what kind of market we get. For instance, a volatile market displays quick, significant price fluctuations with sizable swings over short periods and can be very difficult to trade due to the number of unforeseen reversals. The opposite of this kind of market is a dead market, where volume is very thin and results in little price action either way. Like a volatile market, it is not easy to trade as your indicators will generally flatten out with price and provide you with no real opportunities. Then, there is the range-bound market, where price is just undecided about which way it wants to go. Each time you think it's going to remain in a prolonged trend, it just doesn't happen. Now, the last kind of market, the one we love, is a trending market where price moves in the same direction for a sustained length of time. This is where the good stuff is, and with the right indicators, you can definitely profit from. Now that the mini lesson or review, if you're somewhat familiar with the topic, is complete, let's press forward. Today we're introducing the Market Meanness Index, or MMI for short. It was developed in 2010 by a guy named Jorg Mittendorf, but didn't come into mainstream practice until about 2012, and that's totally fine by us. It's a below-chart midline cross, although in actuality, it's more of a single level cross because the midline doesn't necessarily have to be in the middle. Don't worry, we'll explain. In this initial snapshot, we have just the signal line, but we'll be adding components. Open up the settings menu on the chart. There are two levels, overbought and oversold. Since we don't use them, just delete them and add 71.3. We'll color it red for ease of visibility. To find the middle number, just follow the simple formula. Note the upper and lower limit numbers on the chart. The top one is 73 and some change, and the bottom is 69 and some change. If you're not sure where to find them, use this as a guide. Once you see where the numbers come from, you're all set. Now our chart looks like this, but we're still missing something. We need to add a baseline or confirmation indicator to compare it with. Why do we need at least two or more indicators to test the volume indicators? The reason is that volume indicators provide you with a binary response to whether we trade. It's a yes or no, true or false, trade or no trade kind of alert. It is not a long or a short signal. That's what the other indicators provide. We've historically added a simple moving average with the 20 period to our chart. I'm not sure how we picked this, but it probably had to do with what the most simple indicator on the planet might be. Now we've got our testing chart all set up. Nice and simple. We mentioned the bonus material in the broadcast. Here's where we start talking about it. We're going to show you a little bit on how it's tested later in the video, so you don't want to miss that. The next step is to explain how to use the indicator. We can divide the below chart window where the indicator lives into two halves. The trending zone is when the signal line is below the midline, and that indicates enough volume is available for a trade. The chop zone is when the signal line is above the midline and signifies that the market is prone to more turbulent price action, and perhaps sitting on the sidelines may be a better choice. We're going to do our chart work a little differently this time. We took the markup from the blog, and we'll go through that to see how things played out. This will give us time to analyze each signal so you'll have a good understanding of what you're looking for. We'll pick it up here with this first cross and close below the baseline where we've circled the initial signal. Now we'll follow that down to see where the MMI signal line is. Notice that it is below the midline, so that's our notice that we have a signal agreement. We'll take it to the next baseline cross. Remember, baselines are not generally used as exits, but for our testing purposes, we're going to use them as kind of a reset for the next trade. We'll circle the signal and note the win from the previous trade. Now glance down at the MMI and we'll note that we're below the midline, so we have confluence. And the next crossover yields a win, and we're set up to look at the next trade. We circle the baseline signal and then follow it down to see that we have an agreement. And it looks like price crossed above the midline. Follow it down, and even though we have the agreement, the short trade would have been clocked as a loss, so we'll reset for the next trade. That was a win as price continued up, and we've got the next cross below. Follow the dotted line down to the MMI indicator. We circled it in yellow because we wanted to take a closer look. Zooming in, we can see that it blipped just slightly above the midline, but rules are rules, and we follow our rules, so we skip the trade. We look for the next signal, which happens to be the next period. This tells you that price is consolidating and the market is taking a breather. Follow the line and we get another bump above the midline again, so no trade, and we're ready for the next setup. A couple of candles later, we get the next signal, and so we look down at the MMI and note that it's below the midline, so we take the short trade. We'll follow that price action down and note the next setup, noting the win as we follow the line down where it is above the midline. We know what that means. In fact, the next series of signals are not tradable because, as you can plainly see, MMI does not agree. That's good, it's doing its job. The next signal is an interesting one. The close below the baseline was a couple of periods ago and MMI was not in agreement, and that's fine. We'll usually give it up to a trading week to catch up before letting it go. We'll follow that delayed agreement down and it looks good, so we're in the trade. And that was a good move down, and so now we're ready for the next setup. MMI looks good and we're in a long trade. Alrighty, it looks like price has flattened out again and we have some crossovers, so that long went nowhere and we've got a small loss. No big deal. The next couple of signals in that dead market were no trades because MMI is not in agreement and it keeps us out of bad losing trades. Then we get a fresh short signal and follow down for an agreement, and it runs down for a winning trade. Wasn't that fun to see how volume indicators help you stay out of losing trades? And this one did a pretty good job. When VP and I first discussed it, he said he actually hadn't heard of it and that it was pretty darn good. It's in the library, so go grab it. While nothing is 100% sure in any market, getting an edge to help you find better trades is always an advantage. We've got a bonus section in this video and a major announcement. The first is how we use the NNFX Algo tester program to test this volume indicator. We'll show you the settings and which test to use. The special announcement will be at the end of the video, so stay with us. You don't want to miss this. We're going to give you the big picture and not get into all the gory details since this is not that kind of video. Okay, let's get started by looking at the settings menu of the Expert Advisor. The first setting you'll need to toggle from the drop-down menu is the BL or baseline choice. This allows you to test a baseline only or a baseline and a volume indicator together. Next, you'll specify the simple moving average as your baseline from the drop-down menu. It's included in the box set. Then, on the volume line, you'll specify the type of volume indicator you're using. In this instance, it's classified as a one-level cross. Under the indicator parameters section, set the baseline to 20, meaning that you are forcing the simple moving average to use the 20 period for signals. The next field to fill in is the heart of what we're attempting. Here is where we set the string needed so the Expert Advisor knows what to do. The first variable is the number of periods of the MMI indicator. You may change this number if you want to try different settings. This is the name of the indicator. It needs to match exactly what the file name of the indicator looks like. If there's anything off, then you'll get an indicator not found error. The next setting is the value of the buffer. Note that it is a -1, not just a 1. If you don't include the negative, the indicator will be treated like a confirmation indicator and return signals as long and short, which we don't want. We want yes trade or no, don't trade. And the last one is the midline value. Now we'll briefly cover optimizing the indicator for better settings. First, we'll assign the variable input 1 to the baseline value. This lets the script know that there will be more than one value. If you follow the two arrows down, you'll see that it's paired with the same name and where the data goes. Next is input 2, which represents the period of the MMI indicator. And input 3 represents the midline value. Below are the input values. The first column represents the start value, or the first number in the series that will be tested for that variable. The next number represents the step, or how much the number will change within the data set. And this column represents the last number tested in the sequence. Be sure those boxes are checked so the expert advisor knows you've turned on those input variables. And when you're finished, be sure to click OK so you can go ahead and set your dates, currency, and time frame. There are some other settings which you'll need to be aware of, and those answers can be found at the program's website, but we wanted to give you a few nuts and bolts to get started. If you run into testing issues or have questions, please do not contact us. You're going to want to visit the No Nonsense Forex Algo Tester website for those things. Don't have the program? Check it out to see what it's all about. And as a special incentive, we were able to secure a special discount for a very limited time from the developer of the program. It's for a limited time only, and normal prices will return on the 2nd of May 2026. He is offering a discount of 15% across the board, including the first month for monthly licenses, the first 3 months for quarterly licenses, the first year for annual licenses, and the entire price on a lifetime license. That's a pretty good deal. We also made a video discussing it called Backtesting Indicators. We're including both links in this video's description. We're not done yet. We still have one more announcement, but first we have to do the necessary disclaimers. You know all we do is education and do not provide financial advice, right? If not, now you know. End of disclaimer. I also wanted to remind you to subscribe if you've not already done so you don't miss cool video tools like this one. Tap that subscribe button and be part of the in crowd. And don't forget to check out the No Nonsense Forex 201 Advanced course with a video on our channel describing all the goodness you'll get. And if you need something to read, there is a page solely dedicated to listing a quick synopsis of what each module is about. Okay, we're glad you stuck around for the announcement. Our first paid indicator, which we worked on for a long time, is finally ready to be released and will be in our next indicator profile. It will establish our website store with others to be released in the near future. The results were excellent and it's very easy to use. We're hoping this becomes the sharpest tool in your trader's toolbox. Once we nail down the exact date this goes out, we'll broadcast a quick email so you'll know. If you're not on our broadcast list, please send an email to dan@stonehillforex.com requesting to be on the broadcast list and part of the group that finds things out first. We're at the end of our video now, and if you stuck around until the end, we appreciate your company. We hope this was helpful, and we'll see you for the next one. I'm not going to lie, it's going to be awesome. And never forget, our only goal is to help you become a better trader.